Demand for Bitcoin ETFs is skyrocketing, but price is barely moving. And ZKsync, did they just announce the most controversial airdrop in the history of crypto? We cover all this right now in the Collective Shift Weekly Recap. Actionable insights and a breakdown into the crypto market, all in under 30 minutes. As always, getting started with a market update, and it was another red week for crypto. Bitcoin was hovering around 70,000 US dollars for most of last week, before sliding over the weekend and into the start of this week. So at the time of recording, Bitcoin is around 67,500. That is down 2% for the past 7 days. ETH is around 3,500, which is down 6% for the past 7 days. Solana similarly is down 6%, and that is around $155. As it has been a similar tale all of this bull market to date, you tend to see sort of exacerbated or more extreme returns for altcoins in either direction, reflecting whatever Bitcoin does. So if Bitcoin's up 2%, you tend to see altcoins up 5 to 15%, and vice versa to the downside, and that is what we saw last week. So as you go down the page on CoinGecko or CoinMarketCap, you would expect to see some double-digit percentages to the downside for a number of altcoins, and that is what we saw over the past 7 days. So why have prices been headed downward? I think there's never one answer. We always think that we know the answer, whether people it's talking on the business news channels or people talking on Twitter. They always like to pigeonhole things into one or two answers, but acknowledging that there isn't one answer, I think one thing that a lot of people are talking about, and what seems to be the sentiment at the moment, is some selling off ahead of the Federal Reserve announcement, which we spoke about last week in the podcast. And we've also got some big data releases coming out in the US in particular to do with inflation. So the CPI data is coming out on Tuesday, the 11th of June in the US. But yeah, investors all around the world, and even crypto investors, will definitely be tuning in at 2:30 on Wednesday in the US time, that is, so New York time or Eastern time, and that is when the chairman, Jerome Powell, will be announcing the Federal Reserve's latest interest rate, which is widely expected to be held steady, but far more importantly will be his commentary to do with the outlook for interest rates and really just what is the Federal Reserve. What are their latest thoughts on the state of the US economy, and looking for signals that may indicate that they are inclined to maybe cut rates a bit more aggressively than expected, or vice versa. And again, this is highly relevant to crypto investors because, as crypto investors collectively, we would prefer there to be lower rate environments. That is when risk assets or risk on assets tend to perform better. Of course, it's not the be-all and end-all. We do know that crypto has performed extremely well in this latest environment where interest rates were going up. So, it's a nice to have, but, not a must have. But still, I am expecting there to be 1 or 2 more rate cuts in the US. They haven't technically cut rates yet. So I expect them to do it at least once or twice before the end of the year. And if that happens, I expect, crypto prices or the market to really, look favorably upon that, leading to more demand for the likes of Bitcoin and other cryptocurrencies. So all eyes on that as we head into the rest of the week. Interestingly, this comes at a time when other central banks around the world have actually started to cut rates. So again, I think if we just picture ourselves 6 months from now, it's at the end of December of this year when we're reflecting on 2024. I definitely think that this stage that we're in at the moment, call it the first half of June, will be talked about and discussed as one of the highlights of the year, or one of the times when I suppose there was a shift in the tide, so to speak. It's when we saw other central banks actually not just talking about cutting rates, but actually cutting rates. And I guess you could draw an extension of that in the sense that it could be putting pressure on the US to be cutting rates. Not going to go into too much detail here, but if every other central bank around the world is cutting rates and the US is sort of keeping their rates steady, it puts upward I guess, pressure on the value of the US dollar. It really strengthens the US dollar, which, for political reasons, the US doesn't want their dollar to be getting way too, I guess, powerful. Makes them, less competitive on international markets and whatnot. So it will be important to see, if this is going to put pressure on the US to be cutting rates maybe sooner than what they otherwise thought. So just to highlight some of those, announcements or updates from last week, we saw the ECB, so the European Central Bank, cutting rates for the first time since 2019. So quite a while between cuts there. So again, very notable and will be looked on as a key event for 2024. Similarly, another of the world's largest central banks, the Bank of Canada, also cut their key interest rate to 4.75%. So we will be looking to see what happens with Jerome Powell and the US Central Bank this week. Back to the crypto market, and by far the biggest thing that has been driving the prices of Bitcoin so far this bull market has been the ETF story. As we've been covering ad nauseum on this podcast, I would like to highlight, last week was a particularly, an outlier, so to speak, if you're just talking about recent months, where we saw an enormous uptick in ETF inflows. So for those listening to our podcast, I'm just showing a chart here that really just says, hey, there was a massive surge of demand for these ETFs, up to levels we have not seen since the start of March, around the time when Bitcoin was hitting its all-time high price. And we actually saw quite a streak there where Bitcoin, I think, went on 18 or 19 consecutive trading days of net inflows. So that was worth, I think, around 4 billion from memory. It's just substantial amounts. I think the amount of inflows at the moment is north of 15 billion. In terms of since these ETFs went live for trading at the start of January, we've seen, just slightly more than 15 billion in total assets under management for these ETFs, which is well beyond expectations. But you may be wondering, many investors were last week, well, look, if so much demand is coming for these ETFs, why on earth is the price of Bitcoin not moving? We saw this story all throughout the end of last year and early this year that, hey, if net inflows is really high, that should equal a higher price for Bitcoin because these ETF issuers have to buy Bitcoin from the open market or from miners. Bottom line, they have to buy Bitcoin to back their ETF products. And that was the big unlock and why everyone was celebrating the ETF announcement. Well, it turns out that is still true, but I think the correlation is not as one-to-one as that. A big reason is because you have things called the basis trades or cash and carry trades, which is effectively something that is done in traditional finance. It's not just exclusive to crypto, but you're seeing an increase of market participants starting to, I suppose, get long exposure to Bitcoin through the ETFs. So essentially they're buying ETFs, which could explain why we saw such a large increase last week in particular. However, we are also then seeing these hedge funds like going short and purchasing, getting long short exposure on the futures markets to instruments such as on the CME. So buying short, getting short positions in Bitcoin futures markets, and that's sort of offsetting their risk. So I'm not a trader. I don't have a background in this area, but from my understanding, it's sort of just negating the price risk. And then, why are they doing this trade where you're sort of going long on the ETFs or the spot market, but then you're going short on the futures market? You're sort of arbitraging them and collecting a premium that's offered from the funding rates. So this is essentially more or less akin to free money if you're talking about it from a professional trading standpoint, or even, a lot of these institutions perform these cash and carry trades in many different markets, such as Forex, and even just public equities and whatnot. So we're seeing this involvement or introduction, or I suppose increased activity regarding this cash and carry trade, with the ETFs being used as the mechanism for going long. How do we know that this is actually happening? Well, a big reason is that you're seeing the interest, or the open interest in the CME going up significantly. So that is sort of taking that side of the market. But then, to reflect the long exposure, we are seeing this Bitcoin ETF flows also going up significantly. So, that is one explanation why, that's one explanation why Bitcoin's price isn't just going up to 80,000, 90,000, 100,000, with these ETF demand absolutely skyrocketing. So a bit more nuance there. I still think, look, is this whole Bitcoin ETF thing just been a big sham, and it hasn't actually led to any increased demand for the actual underlying Bitcoin? I think that's absurd. I think absolutely not. However, on the complete other side of the spectrum, I think it's naive to also look at the Bitcoin ETF flows chart and, just from looking at that, deducing whether or not there's actually more demand for people investing in Bitcoin for a long-term investment. So it's always a balance of both, I suppose, is what we're saying here. And a very, very important chart to get an understanding for why, things aren't just going up and to the right on the Bitcoin price chart. Okay, moving on to the next thing from the past week that you need to be knowing about. It is, of course, the Ethereum ETF. So, we've been covering that recently. Where are we at? We saw the approval coming through from the SEC that they have approved the first of 2 components for their ETFs to go live. Everyone celebrated, but now we're waiting for that second batch of approvals to come through. That has sort of taken a bit longer than people were expecting. So just getting a report up here from the block. They are reporting that some of these issuers have sort of not heard anything from the SEC. So again, pouring cold water in a sense on this idea that the SEC was like extremely highly engaged with these issuers. We've got comments here from Gary Gensler recently as well that these would take some time, these approvals of these S1 forms, which are essentially the second of 2 parts that you need for an ETF to start trading. So just some context here. I think I said last week the Bloomberg ETF analysts had sort of put their estimate on when these Ethereum ETFs start trading at the start of July. Again, whether that happens at the start of July or the end of July or even into August, from my perspective, I'm not too fussed on when that happens. When I'm, as an ETH investor, I don't really mind when that actually happens. I also care that it actually does, in fact, eventuate. Because I'm pretty confident that these ETFs won't see that much demand, at least in the opening 3 to 6 months at the least. That could even drag out to the opening year or 2, for many reasons. I'm not going to elaborate on this podcast for why I don't think the Ethereum ETF will get that much demand. But for me, I think there's a lot of talk about the Ethereum ETFs at the moment, but I think that's more so just the consequence of there not being too much major news to talk about. So I did just want to quickly include it in this week's podcast, but also with that key detail that, look, everyone's just guessing when these ETFs will go live. The fact is they will at some stage in the next few months, and I wouldn't worry too much about, whether it happens at the end of June, whether it happens in July, whether it happens in August. Okay, next major news update, getting away from Bitcoin and ETH for the time being. We saw Franklin Templeton, so one of the world's largest asset managers. They're also been particularly involved in crypto for a number of years now. Reports here that they are looking to set up a private fund that would get exposure to to assets that are not BTC and ETH. So as we know, Bitcoin and ETH take up about 70% or so of the crypto market, but there are thousands of cryptocurrencies that occupy that remaining 30% roughly. So yeah, Franklin Templeton here looking reportedly to get ways to get exposure to those other cryptocurrencies and potentially even providing staking rewards. So yeah, Jenny Johnson, she has been quite an advocate for crypto. She is the president and CEO of Franklin Templeton. She has spoken positively about crypto for as long as I can remember, for several years now. So yeah, we'll see whether this does come to fruition. Why does this matter? Again, it just, if there is more ways to get access to the spot, access to these cryptocurrencies through vehicles offered by the likes of Franklin Templeton, ultimately that adds significant legitimacy to this very young and immature in many ways asset class. And it also just opens, I suppose, makes the asset class more accessible to larger pools of capital that are maybe a bit more conservative and take a bit more convincing to maybe look into cryptocurrency. So yeah, just something there that is worth noting. Again, they are just reports at this stage and have not been confirmed. Another major news that definitely was confirmed last week and celebrated around the industry was Coinbase's release of the Smart Wallet, which had long been awaited for. Why was this such big news? If anyone who's been in crypto for more than a few months, you would understand that the user experience still leaves a lot to be desired. And we know Coinbase, we know the world is by the day and by the week getting more towards being a mobile first society. And that's definitely true for even crypto. So Coinbase here has been working on not only improving the wallet experience, but improving that from a mobile first perspective. And that has come out in their latest product known as Coinbase Smart Wallet. So yeah, this was one of the highlights of last week for sure. Again, from a crypto investor's point of view, why does this matter? It definitely matters because crypto so far has been just intimidating, all those other words for new people who are wanting to get involved in the space, or maybe if you're trying to onboard your friend. So far it's been like pulling teeth out trying to explain or trying to onboard them in a way that doesn't involve all of these jumping through all of these hoops and completing all these steps. So yeah, Coinbase here trying to make it as easy as possible to get new people involved in crypto, ultimately, which can lead to more demand for cryptocurrencies on an individual basis. So I'm not going to spend time sort of going through why Coinbase Smart Wallet is, I guess, a first of its kind. It sort of takes different innovations from different wallet competitors out there and it sort of just combines them. I can't imagine how many millions of dollars worth of R&D Coinbase put into creating this smart wallet. But yeah, it's quite impressive. It sort of, I suppose, brings in a new wave of a new era in a sense. In the most optimistic case, it sort of kicks off a new era of what it's like to use, quote unquote, use crypto or use crypto networks. So I'll link to the announcement here. And I'll also link to this explainer by Sid from Coinbase, who has worked on this wallet for a number of years. And he also breaks down like why this is such a massive achievement for Coinbase and hopefully the industry at large. So just want to highlight that there. Lastly here, another big news item from the past 7 days. Speaking of that sort of institutional adoption, we have seen something to do with real world assets or asset tokenization. Two big players here, Fidelity and JP Morgan. So we've seen Fidelity selecting JP Morgan's Onyx digital assets blockchain to tokenize a money market fund. So we hear a lot about asset tokenization. What is the big appeal of it? Essentially, all of these big asset managers, it just saves them a lot of a lot of overheads from an operational and administrative standpoint. Again, these are profit-driven businesses, the likes of BlackRock, Fidelity. If they can find ways to significantly cut their operating expenses, they will go ahead and at least trial these things. And if they are successful in cutting costs, they will even go more aggressively into ways to cut expenses. And that is what asset tokenization, that's why it is such a big appeal for all of these businesses. There's many others like proposed or purported benefits of asset tokenization, which I can talk about for a while. But again, just due to time constraints, I'll just leave it there. But we have done quite a bit of content for Collective Shift members over the years on asset tokenization. And yeah, the big news here, I wanted to include this because it was another example of a financial institution using a permissioned blockchain. So Onyx, JP Morgan's Onyx has been operating for a number of years now. I believe JP Morgan has something called the Tokenized Collateral Network, or TCN from memory. That's right, this thing. And again, that's all to do with other clients and institutions using their Onyx blockchain, which importantly is something that is based on Ethereum, but it is not the same as using the public Ethereum blockchain. So as many of you would know, there are 4 types of blockchains. There are, public and permissionless, which is Bitcoin, Ethereum. There is public and permissioned. There is private and permissionless, and there is private and permissioned, which is something like JP Morgan's Onyx blockchain. This is what a lot of these institutions typically start with when they are experimenting with blockchain technology. The big hope is that they, after sort of working in these permissioned environments for a while, the big hope is that they, expand to the likes of public permissionless blockchains, and therefore it would really increase demand for the likes of Bitcoin and ETH and any other related cryptocurrencies. But for the meantime, none of these headlines, in my opinion, really directly lead to more demand for ETH, for example. Like it doesn't make any sense why something like this would lead to more demand for ETH. However, the big hope is that eventually it does. So look, every week I'm seeing big news to do with asset tokenization. It's a space I historically have been quite bearish on, and I still continue to be bearish from an investor point of view. I think from an analyst point of view or whatever, from a non-investor point of view, I think it'll definitely take off and will be a big thing in the future. But in terms of getting investment exposure to it, that's something I've never been too bullish on personally. The vast majority of RWAs, or real world assets, are stable coins or tokenized sort of cash equivalents like US treasuries or whatever. I'm really bearish on things like tokenized versions of property or tokenized versions of fine artwork or other collectibles. I just don't really see why it is such a materially better alternative than what we have at the moment. But again, maybe I'm just haven't spent enough time researching or whatever, but I wanted to include at least this story just to give you some insights into how I think about the RWA space and where the value sort of is going to accrue from, I guess, a market or investment standpoint. Okay, onto some big altcoin news from the past 7 days. Every day I check in on newsletters or Twitter or whatnot and see dozens more altcoin announcements, it seems. So I wanted to, as always, highlight some recent ones that have caught my eye. Just very quickly, Arweave is one that we've been covering for a number of years now. They announced their AO protocol, I want to say a few months ago, and they also announced last week, or confirmed, that the AO protocol will have its own token of the same name, the AO token, just to make it as confusing as possible. So we've got the AO token being 100% fair launch, so no VC sales or anything like that. It's following the same distribution curve as Bitcoin, interestingly enough, with a 4-year, I guess, halving. And there's the tokenomics on the screen here, so exactly similar, supply dynamics as Bitcoin, and that is going live on June the 13th. So that is something happening this week that I'm looking forward to. Arweave is sort of, again, expanding, as you're seeing with a lot of these more mature protocols. They are expanding, well beyond what they were initially, I suppose, described as, or what they initially set out to do. Chainlink is a good example of this. Arweave is a really good example of this as well. Filecoin is another example where they're really, starting to expand into other areas. AO sort of marks Arweave's expansion into effectively like decentralized computation, whereas historically the Arweave protocol itself is more used for storage. So that's something this week that I'm looking forward to. Another big thing from the past week was Optimism. They finally, after many years, released fault proofs, or what are previously known, or an alternative L2s are known as fraud proofs. This has always been a big criticism of Optimism, that they don't have any fault proofs. What this means, I'm not going to spend time, explaining, the ins and outs of why this matters or what it actually means from a technical perspective. We have done a lot of content on this over the past few years, like explaining why this is sort of a limitation for Optimism. But to really simplify like why it matters, it means that we as Optimism users can be more confident using Optimism without having to rely on a small select group of people that they aren't going to do anything that we would not approve of, or do anything malicious or something behind our backs. To simplify it as much as possible. Arbitrum had always had fraud proofs or fault proofs from the get-go, and that is a reason why I believe it had always managed to get a lot more adoption, and it is such a much more mature and I suppose I guess a more valuable chain when you look at total value locked and active addresses. That's just one reason why I think Arbitrum has led Optimism so far. But now Optimism really going a long way to, I suppose, shore up that difference between the two leading L2s, with Optimism at the moment now are starting to roll out fault proofs. I think they're doing so in a staggered manner. But it's hard to understate the importance of this. Unsurprisingly, the price of Optimism did not move up or down in response to this announcement, which sort of reflects, I suppose, the nature of cryptocurrencies in 2024, where fundamentals still aren't that important. They are important, but I don't think as much as what a lot of people would like to think. I think they will get more important as time goes on, but I think for the time being, the likes of narratives and sentiment play a much more important role when you're talking about short-term price outlook. So I'm not surprised that the price of OP did not move in response to what is technically one of the most significant announcements for Optimism of 2024. And just finally, the last noteworthy altcoin news from the past week. As I said, there was dozens and dozens of announcements from the past week, but one more worth highlighting, of course, is ZKsync, so another Ethereum layer 2, finally announcing its token after roughly 3 to 4 years of, I suppose, not having a token. So this has been anticipated for many years now. People have been using ZKsync purely in anticipation of trying to qualify for an eventual airdrop. This has just been announced in the last few hours. So from my understanding, ZKsync is airdropping 17.5% of the ZK token to initial users. So in a one-time airdrop. So that is huge. Why is that such a big deal? That is a big percent, 17.5% in a one-off airdrop. I think from memory, Optimism did, I think, about 4% when it launched as a one-time airdrop. and I think Arbitrum did around 9, 10, or 11% when it launched for a one-time airdrop. So yeah, a very, very big disparity between these competing layer 2s. ZKsync, yeah, has a total supply of 21 billion. So yeah, doing 3.6 billion, yeah, relates, corresponds with about 17.5% of the token there. I've seen quite a bit of backlash. As always, any airdrop announcement always has criticisms from any of the stakeholders, because you have to balance so many competing interests from, the team, founders, also people from third-party ecosystems who may or may not have been expecting an airdrop. And then, of course, the early users who are always expecting as many tokens as possible. That latter group, I suppose, has been particularly affected in this case with ZKsync, because it has been live for so long, has attracted so many airdrop farmers, which are just people who are using the network purely just to get the token and sell it. From my understanding, ZKsync had about 6 to 7 billion addresses in its history of people, with one address, being a person who is using the network. So that's not 6 or 7 billion users, but 6 or 7 billion addresses, knowing that one person could have multiple addresses. So even if that's so, they've still cut out about 90% of historic addresses who use ZKsync. Or I suppose not cut out, but in the sense they've made them not eligible for this airdrop. So I've seen quite a bit of backlash already from people not qualifying for an airdrop when they thought that they were going to. As I said, no airdrop is ever. I rarely ever see an airdrop where everyone agrees, hey, that was a fantastic distribution. There will always be parties who think they got the short end of the straw. So congratulations to anyone who got the ZKsync airdrop. I personally had not been using it, but yeah, it will be one of the highlights of 2024 when you look back at the year that was for airdrops. And yeah, we've got the start of January being the deadline for claiming tokens. So as per usual, just be aware of scams at this time. There are always a lot of scamming attempts when there is big airdrop news such as this from ZKsync. So just be diligent with checking that you are on the correct website or the correct URL before connecting your wallet, and yeah, other similar things like emails and whatnot. Be mindful of clicking links. But yes, that will do it for this week. As always, the big thing I'm keeping my eye on will be June the 12th at 2:30. Jerome Powell, announcing the Federal Reserve's policy rate change and sharing their commentary on the state of affairs. And look, if everything is sort of in line with market expectations, including the CPI data that comes out on June the 11th, I do expect the markets to bounce. That's my expectation at least. But yeah, longer term, I still think that this bull market is around the halfway mark, and that crypto prices will be going up significantly before the end of the year. But for now, thank you for tuning in. If you do want more free weekly insights from Collective Shift, head over to our newsletter and subscribe. And you can get a free newsletter every Friday. So you can subscribe over at collectiveshift.io/newsletter. That's collectiveshift.io/newsletter.